G'day folks, Jim here from AudUsd Forex. It is Saturday the 6th of March. Well, we managed to be reasonably accurate on most fronts last week in terms of looking for a stronger dollar, generally weaker stock markets and a softer gold price as well. Oil also reached our longer term target, albeit much quicker than we expected it to do so, with West Texas Intermediate heading above $66 a barrel after the OPEC meeting, at which it was agreed to extend oil output cuts until April. Now looking ahead with bond yields continuing to climb after Friday's very strong employment data in the States, the expectation seems to be pretty much for more of the same as funds flow back into the US dollar, and the higher yields look likely to provide further headwinds for the stock markets. Now we're going to have a quick look at the heat map, and as we can see from the longer term charts here, all the currencies seem to be under pressure from a stronger dollar, and that looks as though it's going to continue. The euro looks a little bit heavy, but dollar yen is the real mover this week. That's up over 2%. Sterling looks very toppish to me after its uptrend. The Swiss franc is weak and is really leading the way on much of this. And the Aussie and the Kiwi are coming under pressure as stock markets turn down. Looking at the stock markets, well, actually, before we do that, the dollar index looks stronger in the long term. The short-term charts actually suggest that we could see a bit of a correction and a softer dollar over Monday, Tuesday, in which case I'd be looking to buy into any dips that we do see there, but we're going to have a look at the charts there in a second. The longer term US stock markets still seem to be heavy. The S&P, the Nasdaq in particular, we'll have a look at Nasdaq chart in a minute. The Aussie market, pretty neutral. Gold still looks heavy. Oil still looks as though it's going to go higher, and I'll leave the crosses alone. They're all pretty messy, and the real interest is in the dollar. So without further ado, we're going to have a look at the charts. Okay, so we'll start off with a quick look at what's driving all the action here, and this is the 10-year US dollar bond yield. And as you can see, we made a new sort of 12-13 month high on Friday, just above 1.6. And I suspect we're going to go higher. The daily indicators are becoming a little bit overbought. But if we can take out this previous high here, so 1.65, I think 1.68, I beg your pardon, we can go up towards this 1.8 level. Now, the indicators on the longer term charts, just have a quick look at those. The weeklies are heading higher, and the monthlies likewise are looking pretty strong to me. So here we go. And they're coming up from an oversold bias. So I think we are going to head higher, and ultimately that's going to lead through to a stronger dollar, and probably some headwinds for the stock markets. If we go, while we're here, if I have a quick look at the dollar index, the daily indicators do seem to be turning higher, and I think there's half a chance we can probably test this sort of 92, 90, 93 level at some stage in the course of the coming week. We finished just below 92, but the dailies look strong, and the weeklies likewise seem to be building a head of steam as well to move to the top side. So my target here is about this 93 level. It could take a while to do so, and in the meantime, in the short term, the euro charts are a little bit oversold. We're going to have a look at the euro. Okay, so here we do have an hourly chart of the euro. We saw this spike down just below 119 after the non-farm payrolls numbers came out, and after that it just eased into the weekend. The hourly charts somewhat oversold, could be turning a little bit higher. The 4 hours likewise, they're oversold, have yet to show any sign of bouncing. But I suspect if we do see, going back to the 1 hour charts, if we do see a move back towards sort of this 119.70 to 120.20 or so, so around this 120 level, if we saw it up there in the next couple of days, I'd be looking to sell into it, because further out, if we go and have a look at the dailies, they are beginning to turn lower. The weeklies also look a little bit heavy. And as far as targets go, well, I'm looking immediately for this a test of the 200-day moving average, currently at about 118.10. And if we go below there at any stage, then we might be in for a move towards 117. The 100-day moving average is at that 120.25 level. So that's between 119.70 and 120.20 is where I'm looking to sell into it. Looking for ultimately a test back below Friday's low, down to about 118.10. Moving forward to dollar yen, Okay, here we have a daily chart of dollar yen, and it broke even above my expectations of a move towards the 61.8% level at 108.20. Got as high as 108.64, and with the 4-hour charts looking strong, I think we can possibly head higher still. The weekly charts are pointing north. We have got the 200-week moving average 108.90, so that's going to provide some resistance, but above there I think we can probably head back towards 110, and that remains to be seen. It's still some way off. We've had a good move in dollar yen. In the short term, the indicators have become overbought and are turning lower, so if we saw it back down around this sort of 107.80, 108 level, I'd probably be looking to buy it on Monday in the hope of a move above these highs later in the week, and then potentially on to sort of that 109, 110 area. As I say, I think with higher yields are going to keep the dollar well underpinned, and pullbacks are going to be pretty shallow, I think. Moving on to cable, and having topped last week at that 142.30 area, the charts now look generally pretty heavy, and really a test below Friday's low, 137.70, wouldn't surprise me. And as I said last week, I think we could easily see a test of this or 136.40 level, which is probably where I'd be looking to buy sterling again for the next leg up. But at this point in time, I'd rather sell into rallies with, I guess, 139. If we went above here, I'd probably stop myself out. That's above 140. That was last week's high. But I think we sell rallies until 140, looking for a move back down to this 136.5 level. Now here's a weekly chart of dollar Swiss. We liked dollar Swiss last week, and it's duly moved up to 93, above 93 the figure. And looks to me the weekly suggests we've got further to go on the top side. We've got resistance right ahead of us. It's 93.30. And then the next real big test will be sort of 95.40. That's a long way off at this stage. The daily charts show us at key FIBO resistance here, so we might knock around here for Monday and Tuesday. But if we can take that out, then there's not an awful lot of resistance until this high here, which is sort of 94.5. But in the meantime, I guess this 94, the figure would be resistance if we got there. The daily charts are becoming somewhat overbought, as are the 4-hourlies. So I don't expect too much upside action on Monday, but it may be that we just chop around here, waiting possibly for the ECB meeting, which takes place on Thursday. So the ECB are like to be fairly dovish. That's possibly going to put some heavy downside pressure on the euro, and could help take dollar Swiss higher. As far as dips go for dollar Swiss, really I'd be looking to, if we could get it back, get some in around the 92, the figure level during the week, I think I'd be looking to do that. Probably with a stop loss sub sort of 91 or 91.50, 91.30, but I'll be looking to buy it in the low 92s for an eventual leg to the top side. Moving forward to the Aussie. Now the Aussie rejected the peak here just above 80 a couple of weeks ago, and it's been fairly steady lower ever since. The 4-hour charts still point lower, and the dailies equally look a little bit heavy. So I think once again, as with last week, I think selling rallies is probably the way to go. I'd probably look towards 77.30, 77.20 now, with a stop loss above this sort of 78.20, which was last week's high. On the downside, my targets would be the 100-day moving average. That's about 75.15 at the moment. Still some way off. In the meantime, we've got these lows here, sort of 75, 60, 70. But I would be looking to sell into strength up around here, because with the dailies pointing lower, and the weeklies, we'll have a quick look at them. The weeklies look a little bit heavy, and I think if I'm right about the stock market, although we had a good rally in stocks on Friday, the bigger picture does still look a bit heavy. So I think that is probably going to weigh on the Aussie dollar. And as I say, I prefer the downside, so looking to sell into rallies. The same applies to Kiwi. I won't waste time on going through the charts there. But we'll move straight into the stock market. Now, much of this move has been led by the Nasdaq in the stock market. And we had this kind of head and shoulders top with a neckline here. Now, it broke down through the neckline and has come back to sit right on it. So potentially that's quite a bullish scenario. If we can break back above the neckline, then I think we can possibly go a fair bit higher. But the 4-hour charts are suggesting that we are going to see a further rally. But looking further out, the dailies do look heavy. So if the neckline holds, then we've got a fair bit of downside potential ahead of us. The dailies, as I say, do look hold, and the weeklies actually look pretty ominous to me. They don't look happy at all. We have come back. We tested the 23.6% support of the whole move up over the last 12 months. If we break that, so that's at sort of 12,150 or so, then I think there's further downside ahead. What really worries me about the stock market are these monthly charts, which are extremely overbought and showing bearish divergence. So while I'm not going to go against it and say that we've actually reached a peak here, I think we need to just be very wary indeed. And if US yields do continue to head a lot higher in the coming months, the real pressure will start to eventuate through to the stock market, and the Nasdaq will be leading the way lower, I think. So we're going to look at the S&P. Now, the S&P had a really strong session on Friday, closing up 2%, having looked heavy for much of the week, really. And the 4-hour charts do show some further upside potential for Monday, Tuesday. The dailies, though, look somewhat heavy. We broke this long-term trend line. We've come back to basically sit right on it. I think we may well just chop around here for a couple of days around this 38.40 level. But the weeklies, as with the Nasdaq, look pretty heavy, and so do the monthlies. Let's have a quick look there, blow that up. The monthlies are overbought. They're not really showing any signs of turning lower yet, but the weeklies just begin to look a little bit heavy. So I'd be a little bit cautious. I'm still in the frame of kind of buying dips at the moment. But I'm very wary in leaving pretty tight stops on the downside. If we were to move back below Friday's low, 3700 or so, 3710, then I think we possibly can head lower. I'm not going to spend any time really on the Aussie stock market. This is the SPY, the 4-hour chart, and we're chopping around between the high here, so around 68.5, and down around here, so just above 66, the figure. I think we use that as a trading range for the time being. The dailies are pretty flat. The 4 hours are pretty flat, and the dailies are telling us very little as well. We've been doing this chopping session for quite a while now, and I think it's probably likely to continue in the near future. Moving along to gold, and that looks pretty horrendous still. We got down to a low of 1685 on Friday, closed at 1700. But the weekly charts are looking pretty awful. This is going to be decent support, and then down around here again at 1640. That's also going to provide support. But if we break through there, then I think we're in all sorts of trouble. The daily charts also look heavy. So for now, I really can't bring myself to like gold an awful lot. I think Bitcoin's got a bit to do with gold. The move out, I think people are moving into Bitcoin and out of gold. So, and I don't really understand that move, but it seems to be what's happening. So I think I just let gold play its own game for the time being. I think there's easier things to trade. So finally, we'll move along to oil, and West Texas Intermediate. It's hit these highs, it's touched these highs here that we spoke about before, and these are long-term highs going back to what's this 2019. So best end of 2 years. And I think if we, the weekly charts still look positive, and it looks to me as though we could yet test move along to $70 a barrel. In the shorter term, the 4-hour charts are hugely overbought, as are the 1 hourlies. They're looking pretty toppish to me, but the price is still grinding higher. The dailies also look as though they're mildly positive, perhaps, albeit that there's some bearish divergence coming through. I wouldn't be trading oil at these levels now. It's too dangerous to go short, because we could just see a move straight on towards 70. My own play of it would be looking to buy dips, probably back down towards this high here, sort of 63.70 or so. And if we go through there, maybe we get back to sort of 61. I'd keep my stop loss now below this 58.60. That might be too far away for some people. So maybe below $60 a barrel is where you keep your stop loss. So I think it seems to me as though the market's looking for increased demand as the world economy opens up after the pandemic later in the year. So certainly I think buying dips seems to be the way to be. Now that seems to be about it for the markets this week. I'm not going to go into the FX crosses. They're not doing an awful lot. But I will go and have a look at the calendar. Okay, so the week starts off pretty thin on Monday. We've got the Chinese trade balance, although there's no time that that's due to come out. But the Chinese balance probably going to be fairly strong numbers, maybe supportive of the Aussie as we move through the day. We've got very little otherwise. The Centix is due, and the Bank of England governor will be speaking at some stage. Coming into Tuesday, Japanese quarter Q4 GDP. But otherwise, there's not an awful lot. Some secondary Aussie and Kiwi data. The Q4 EU GDP will be the main event for the day, and that's not likely to be a very inspiring number. Early Wednesday, we've got the RBA Governor Philip Lowe will be speaking, and then we've got the Chinese inflation data, with the other major event bit of the day being the US inflation data later in the session, and we've also got the Bank of Canada interest rate decision. The main event of the week will be the ECB interest rate decision on Thursday. Now, the ECB have been particularly dovish over the last few weeks, and it would not surprise me to see more of the same, which could well put some downside pressure on the euro at the latter end of the week and underline that US dollar strength that I'm expecting to see. Then on Friday, finally, we wind up with a pretty quiet session. Some UK manufacturing data, and that's really about it. We've got the Michigan consumer sentiment data, but really there's not an awful lot else apart from the US PPI is due, but that's about it. So we'll leave it there for now. Have a good week's trading, and we'll talk to you again next week. Cheers.